Namaste, welcome to Arthneeti, where we discuss money and money related tools to help you in your everyday investing decisions. News is an important element when it comes to investing. As we wrap up this week, let us look at some of the important news that matter in our investing decisions and which will have an impact in weeks to come. Let us start with how the stock markets fared today. Well, the Sensex and the Nifty ended in green, with Sensex closing at 72,600 levels and Nifty at around 22,000 levels, right? The foreign institutional investors sold roughly 7,000 crores worth of shares today, whereas domestic institutional investors bought shares worth 5,600 crores. In the month of May, foreign institutional investors have sold uh, shares worth 15,800 crores, while DIIs have purchased shares worth 11,000 crores. Now, some of the reasons why foreign institutional investors are heavily selling in the Indian stock market. The first reason that we can give, think about is the high US bond yield rate, thanks to the constant Fed rates that the US Fed has maintained. Secondly, the rise in the India VIX index. Now, India VIX is the India Volatility Index. It was at a 15-month high, touching nearly 15%. This only shows the increased uncertainty in the Indian stock markets, resulting in heavy selling pressures. Outperformance of Chinese and Hong Kong stock exchanges as compared to the Indian stock exchanges also can be one of the reasons. The PE of Chinese stock market was way more attractive than Indian stock markets, where the PE had become very expensive. Then the one of the reasons that can be given for this selling pressure is the hawkish stance by the US Federal Reserve, where they have maintained the rates, and initially where there were talks about 4 rate cuts this year, it has now come down to just one. So this hawkish stance and the US Federal Reserve waiting for the inflation in the US economy to ease has added to selling pressures by foreign investors in the Indian market. Lok Sabha elections. Now, everybody knows that we are just halfway through the Lok Sabha elections, and uncertainties do prevail till the actual results are announced on the 4th of June. Now, this is not that this peculiar rise in uncertainty index is limited to this particular election, but this has been the case for all the elections that have happened before this. There is increased uncertainty in a run up to the elections, and once the results are out and a clearer picture comes to fore, the markets make a turnaround. Correct. This time there are heightened possibilities that the incumbent government will get a third term, and which will result not only in a stability in the economic policies but also a positive outlook towards the infrastructure and economic development of the country. But until the results are out on the 4th of June, there will be uncertainty, and all these factors together have resulted in the market somewhat uh, feeling the pressure and like not performing very high. Now, one more achievement in the mutual fund industry in India, AMFI released the data for April yesterday, and mutual fund SIPs have crossed 20,000 crore mark for the first time. So, it is a milestone. Now, this from 10,000 to 20,000, it took just 2 years time. Now, this increased inflow in the mutual fund industry is one of the reasons for domestic institutional investors buying heavily in the stock market. Now, if you see these figures that were published by AMFI, number of SIP accounts that increased in April was 63 lakh 64,000. Correct. So it was a good hike in the new SIP accounts to be added in the mutual fund folios. The average AUM, if you see the average AUM of mutual funds combining all their schemes together, stood in the month of April at around 57 lakh crores compared to 55 lakh crores in March. So that is a jump of 2 lakh crores in 1 month of April. One more good news for Indian investors is come June, India is going to be added in the JP Morgan Global Emerging Market Bond Index. Now, this decision was taken in 2023, but the inclusion will happen from June 2024. Now, after this news was announced by JP Morgan, Bloomberg also has made its own announcement whereby it will add India in its emerging market local currency government indices. Now, what this means is Indian bonds will get listed, will have a 10% share in this index, and it will attract private equity, international private equity in India. Now, following this news of inclusion of India in these international bond indices, you can see Indian bonds have outperformed its major peers this year. Indian bonds have performed at 3.3% compared to that of China at 2.8%, and most developed economies giving negative returns. Also, following this announcement, Indian bonds have already attracted 8 billion worth of inflows uh, in its debt securities, which will increase come June once Indian bonds are actually listed on these indices. See, this inclusion is a major news. It will not only help India attract foreign capital, but it will open doors for investors from all across the globe to invest in India. It will help increase the investor base of the government securities and also meet the growing liquidity needs of the country when there is a huge push to infrastructure and manufacturing sectors in the country. Large scale capital is the need of the hour, and opening up the bond market or listing these bonds in an international indices will help bring the much needed inflow of foreign funds in the country. You can see this article I have taken from a government of India website, where it says that it will not only help India raise more funds and integrate Indian economy with the world economy, but also increase investor base of for government securities and help India meet growing borrowing needs of the country. So this is a very very important step. Add to this, for domestic investors like us, RBI has recently reduced the face value of bond securities from 1 lakh to 10,000, making it more accessible to small time investors like us. So, all in all, what is all these measures going to do? They are going to bring in more money into the bond market. Now, gold has been rising ever since there is increased geopolitical tensions around the world and stock markets, the ongoing elections and increased uncertainty in the markets. Gold is often looked at as a hedge against uncertainties. Now, this week, the gold prices crossed 72,000 rupees per 10 grams. Thanks to the added demand on the auspicious day of Akshay Tritiya, many people buy gold on such special muhurtas that come every year. Correct. Silver has also hit a record high of 84,000 rupees per kg. One more positive news from the banking sector that came in this week was the quarterly profit declared by State Bank of India, the largest bank in the country. For the first time, SBI Profit for the fourth quarter of 2023-24 surpassed 20,000 crores. Now, as per the news, this 20,000 crore profit was majorly due to treasury gains and fee income by the SBI. It has surpassed all market expectations and crossed 20,000 crores for the first time. Now, Bank Nifty has been like the with banks like HDFC, Kotak Bank not performing too well, Bank Nifty has been held afloat by ICICI Bank in the private sector and State Bank of India in the public sector undertaking space. Now, this positive news from SBI will add positively into the price of that stock. See, as it is important for us to know what is happening in India, it is also very important to know what is happening in the world around us. Now, US, one of the like the biggest economy in the world, it is always good to know what is happening with their stock markets. Now, this whole week, the US stock markets have had a fairly good rally, and today as well, the US indices will are slated to end in green. Now, this is thanks to the positive employment data that was released in the US, which because of which the inflation is expected to ease out. And if this happens, the Federal Reserve will take decisions to rate cut sooner than later, as was expected after the Federal Reserve meeting this month. Correct. So these are positive signs in the US economy, whereby the US stock markets are having a good rally. Coming to news from China, now manufacturing sector expanded in China in the month of April. But what is problematic is there is a supply and demand imbalance. Though goods are getting produced, is there enough demand to buy it is the question. There are also looming pressures of deflation in China, which will result in reduced earnings. Now, how will this news from China affect India? Well, if Chinese economy is performing better, it is good for global trade and simultaneously will benefit Indian exporters. On the downside, if China is performing better, it means increased competition, thereby making it more difficult for Indian businesses to sell their products to the world. Well, to wrap up the news, we started with the stock markets being in the green, and there were heavy FII pressure thanks to steady Federal Reserve rates in the US. Correct. Then we went on to read the news about uh, Amphi declaring its data for the month of April, wherein the SIP inflows were at all-time high of 20,000 crores. Next, we discussed about gold, which traded above 72,000 crore per 10-gram mark, adding to the demand was the auspicious muhurta of Akshay Tritiya. We went on to discuss what is happening in the US market and the Chinese market. All in all, it helped us have a holistic picture about what to expect, where to invest, some cues that we get from such news, which help us in deciding our next investment move. Now, I will try and improve these videos to include more and more news which will help our investing decisions. And I would like to thank you for your patronage and my attempts to bring to fore financial news in simple, lucid language. I hope you have liked this video. Kindly like and subscribe to my channel for more such informational videos. And until next time, stay safe and have a happy weekend. Thank you.